Testing, testing, testing. Okay, good stuff. Hey, Jason, thanks for not being shy. So, no trade calls, no recommendations. Every response for their own stuff. We're here for educational purpose only, just a chat between traders. So let's see what's going on. So 26th of August, 2021, we're seeing a little bit of market movement. And since I've promised to do these once a month, as good as time as any, sometimes we get some dead time over the weekend. Stuff is moving, so why not? Could be interesting. It'll keep me from micromanaging my positions. So welcome all the usual suspects. Let's get cracking. So here, basically, market's moving a little bit. I got some time. No hurry to go anywhere. So I'll take any questions, anything anybody wants to look at, just shoot. We'll look at it live. Basically, what's going on here? We're seeing a little bit of weakness in equities, even though we've saw the market try to stick save this a little bit, but it still continues to be heavy here. My base case, as we were discussing before the open in the daily webinar, is you saw how the market reacted in a little bit of a jittery fashion on those Bullard comments, right? So let's be clear. It was a nothing burger, right? Talking about inflation being higher, a little bit of a surprise. That's a surprise to absolutely nobody, as we said, absolutely nobody who has a life and is buying houses, paying mortgage, paying school for kids, whatever, just going grocery shopping. So again, as we've discussed in the past, the market is going to ignore the writing on the wall. The market is going to ignore all the taper talks and all the trial balloons that the central banks are putting out until it's too late, right? That's just the way things tend to work. We've had ample opportunity of all the central bankers across the world starting to, tell people, inflation's popping up. We're going to have to taper sooner or later. Rates will probably have to move sooner rather than later. We're not talking about extremely hawkish comments, but hey, Fernando, but we're talking about less dovish than expected, right? But the market will continue to, as usual, will continue to ignore, right? Until all of a sudden there's a fait accompli or something like that. And then we'll see a panic. And then that's probably going to be some kind of decent buying opportunity, right? As the cavalry comes in to save things. So again, so far the action is fairly classical. Nothing too surprising at all here, right? What we've discussed and what I've been talking is about, I think the clearest expression of this trade, right, of basically markets having to reprice or, right, acknowledge that we're not going to be lower for longer, lower forever, right, is strengthening of the USD, right? Now, this doesn't mean that the dollar has to go gangbusters, but it's just a fact that when we get this realization, shorter term, you're likely going to see the dollar strengthen, right? So those are my, I think that's where you'll probably get the better bang for your buck in terms of trying to work a position, right, and try to hold some kind of a swing. And in terms of velocity of the move, clearly velocity of the move will likely be on equities, right? We've seen this a lot in the way when the market takes these grinds higher on lower volumes, right? What tends to happen, then it gives those moves back in a fraction of the time that it took to get there, right? That's no surprise. That's also something which is fairly classic, right? So you can see here, the market keeps on getting stick saved, especially this year, keeps on getting stick saved at the 50 DMA. And as long as we keep on getting stick saved at the 50 DMA, well, then, the party continues. But what you see here is that when we talk about velocity of move is likely going to come to the downside, just look at this recent move down here, right? So basically 2.5 days. Basically, if you look at where this move started from, right? Basically, this move started here. So it takes us 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 days to get from here to here. and then 2.5 days to come right back down. That's what we talk about velocity of move. So here, the stick saves will continue until they won't. Likely the 50 won't hold once we get a realization that, we're going to get this taper sooner rather than later, or sooner than the market is pricing in. And at that point, I would expect that the 50 breaks and you see a little bit of a flush, right? In terms of levels, what levels would I be looking at? Well, basically, I'd be looking at this 4,400, which is coming in line pretty much with that 50-day. And I think as long as that holds, that's the key defense for the market, right? So anything move here, any dip back into there is just still a nothing burger. I think if that breaks and we get a daily close below the 50 DMA, then I think that the move back into 4,200, so 200-point move, that could come extremely quick, and then it's all going to be about action at the 200 DMA, right? But that's where we are. That's the way the market is trading. No big surprise. I mean, what's interesting is also, if you think about it, or if you look at any of the seasonal charts, you're seeing here that it's not uncommon for markets to ramp up right here through August into September, and then to see some weakness coming in. So, and that tends to be more pronounced, especially in something like the Russell. So also in terms of counter-wise, it's starting to look interesting, right, for that potential pullback to come in, right? So that's something I would be aware of, and I would be careful about, being too uber bullish here, right? Thoughts about USD CAD on what time frame? I mean, to me, USD CAD is not that interesting here, simply because you've got it's kind of stuck in the crossfires between crude and equities, right? So you're not getting the bang for your buck you would expect. So to me, it's not that interesting. We had a beautiful long setup, right? And here it's similar to what's happening to, and we'll look at it on the daily, simply to what's happening on this dollar move, right? So basically, this was, I think I talked about this on the blog too. You had a very nice breakout here with very nice asymmetric risk reward around the 120 for the move back into the 200 DMA, right? And that was a nice move. But if you see how it's trading, it's still making those higher highs and higher lows, right? So the big question here, especially depending on what happens on equities, what happens on crude, is this strengthening of the dollar still in place? So it won't be able to run, hey man, how's it going? Run too far. But right now, to me, we're kind of like in this stalling phase ahead of tomorrow, right? And tomorrow is going to be extremely important, not only because we've got Powell speaking, Jackson Hole, we'll have to see what else comes, but and as we're starting to see by all these speakers, it's still all very less dovish than expected. Again, because the market has decided not to price a little bit of a less dovish tone, and despite the fact that it's been fairly obvious, but you also have the core PCE coming out tomorrow, and that's something that the Fed loves to look at, right? And it's going to be very important to see if that data point is going to force Powell into a corner in terms of what he can or can't say, right? But it's really all about a dollar move, right? So, if they're going to talk more about tapering, if they're going to talk more about easing, whatever, you'll likely see, risk be taken in, some positions being brought in, and that dollar firm up a little bit, right? And all these moves are in play, and this dollar firming, it's similar to, the cable move, right? So basically you see here, we had this beautiful double top here, right? Very, very tight wrist, daily close here, all the way back through the 200, then the bounce, and the bounce came right back into this 50 retracement on the fib move and sold off again, right? Now you're seeing that little bounce. This is maybe profit taking, a little bit of squaring ahead of Powell, ahead of Jackson Hole. And now the big question is, are we going to see that dollar strength come back in? And at that point, you would expect this to complete this move into 134s, 132 an extension. Or, is Powell going to kick the can down the road, or what are we going to see, huge risk on coming back into the market and this rips back higher, right? But what you have to understand is across the board is everybody's dying to have an opinion or to understand what the market's doing or what the market's telling us. But essentially, as long as we remain stuck inside this zone, the market is telling us it's waiting for the next catalyst, right? It's waiting for the next catalyst. It's still, it's all about the central bankers. Also, euro, right? What's happening? We've had this failed break, move back down. We've been calling for a move back in 117, 115 for a long time. And here, basically what we discuss is a lot of people wanted to get long on this daily reversal here, right? Ahead of the 117. And what I told everybody is, it's very unlikely in August trade, in summer chop, in very thin liquidity, that basically this 117 stops below this 117 hold again, right? This is just like taking candy from children. So what you want to do if you want to play for a little bit of a bounce is you want to wait for that 117 to get flushed. You want to see the market unable to attract new sellers below the 117. At that point, you get long for the counter trend bounce, okay? And here, again, we're stuck, right? We're stuck. We won't know much unless we trade back below these lows through Powell. And at that point, you'd expect 115 to come relatively quickly as the market tries to clip these lows. Or, Powell green light again, and we see everything rip. And at that point, above here, 120 comes into play. But we're still stuck in these broader zones and, 120, 117, and we shouldn't really be surprised because the market is still in limbo, right? We have to see what these central banks are going to do. And unless we have a clearer idea, it's not surprising that the market, globally speaking, is still fairly range bound, right? So again, I don't think the market is doing anything crazy, right? We're still chopping around. And you see here, the market's trying to print new lows, but it's not necessarily getting much traction. Here, the ES is getting stick saved at yesterday's lows. YM is getting stick saved second time where? At yesterday's lows. What's been trading heavy and continues to trade heavy is the NASDAQ, but you see here DS3 holding very, very technical market. You can see, right? These are holding the previous day range, and the one that's heaviest that breaks is holding the DS3. So the market is fairly technical, right? But we've discussed the importance of the action on FANG, and that again, for a number of reasons, we would not be piling in on the long on tech, right? We expect to see a breather here. And if you look at FANG, what's interesting here is that we're kind of stalled. We've had this bounce. We haven't quite come back up to fill the gap. And here is just this is probably like 78% retracement is up here of this move. And essentially what the market is doing is just stalling here. But it's another one where unless we trade back above these highs or we take out these recent lows, then it's much to do about nothing, right? We're just in this sideways chop. And it shouldn't be surprising because the market needs to know what the next catalyst is, right? And unless we have that next catalyst, we shouldn't be surprised to see the market stay heavy, to see the market stay inside these broader ranges, right? Now, is the market moving today because of what's the bombings? Probably not. I suspect, is the market moving because it's still inside choppy ranges and we're just seeing some, machines clipping both sides of the range on extremely thin volume? Probably, right? If anything, my suspicion is that what you saw is that following that kind of shaky reaction on the Bullard comments, on a nothing burger, people are probably thinking, maybe I might need to get out. So you're probably seeing some selling coming in, maybe some hedging as the cash market opens. So it'll be interesting to see what happens into the close too. But you shouldn't be, especially with what we got on the headlines in terms of the Fed speakers today, the FOMC guys today and gals. You would not unless it's a complete, no liquidity meltdown, you would expect things to stay, sideways or heavy-ish, right? As even if it's nothing crazy, but the market you'll see a little bit of profit taking and a little bit of hedging, right? That's all, right? And so you wouldn't necessarily expect these to rip higher again, but you never know. This market hasn't really been trading in a normal way, right? But it's just, it is what it is. Yeah, I mean, I don't know. Does anybody have anything specific they're looking at? Anybody want me to look any chart? Everybody's very quiet. Getting some people messaging me, too shy to use the chat box. Yeah, sure. I think, to me, in terms of the commodity currencies here, the chart that is probably most interesting intraday here is Kiwi, right? And hey, Debbie, how's it going? Oh yeah, I haven't seen any. I haven't seen any of the videos or anything. But I'm happy. The most important thing, I'm happy to see you live. So here, what you're seeing is that there were some stalls here above this previous high, right? And some nice opportunity to try and get into a short position, but it's just not getting any traction, right? And here, it's fairly clear. This is the pivot, right? And it's also in line with yesterday's midpoint. So here, as long as this holds, you'd expect sideways to up, but you're seeing that we are making lower highs. So I think in this situation, right, especially if we take out these lows, you would expect to see a quick move to test yesterday's lows. And if those get taken out, especially if the market trades a little bit heavy on the day, if we see a little bit of risk off flows, then you wouldn't be surprised to see us come all the way back into the 69 area. So I think this could be an interesting tactical trade. But a lot of the stuff is not cheap enough to buy and not expensive enough to sell, really, as the market is just in this wait and see mode. There's some nice, if you're aggressive, there's some nice short on euro here for a move back here. Already got some TPs off. There was a short in the overnight session on cable for a move back to yesterday's lows. Some TPs done on that too. But apart from that, it's just very, very whippy. A lot of air pockets and a lot of wheeling and dealing. Do you experience the markets to be difficult to trade here? Well, nothing's going on really, right? So unless you're blindly trying to buy the dips, there's not that much going on. So, personally, these past weeks has probably been one of my lowest activity level, simply because there hasn't been that much to do, right? So we never get to choose, like cards, you never get to choose the hand you're dealt, right? So unfortunately, this is the hand we're dealt. So especially if the market doesn't play into your traditional strategies or your traditional setups, there's just nothing to do. So it's really important to understand that context and accept the fact that you're just not going to be busy. Now, when the markets tend to become even harder is when the market is not doing anything, right? A lot of these days, as I say, you're always trying to check your quote monitor, but trying to think, did I just lose my internet connection, right? Because it's not moving. And, but what makes them hard a lot of time is if you're trying to force trades when either the market is not setting up to the setups you trade, or especially when you're trying to force trades when nothing much is going on. We like to say when it's quick, trade it quick. When it's slow, trade it slow. When it's not moving, just go to the gym. And this is the kind of situation. There's not that much to do, right? There have been some sells, some buy, but really it hasn't been a nice two-sided market with a lot of activity. I mean, look at the volume on SPY. And so, There's just nothing going on. So I think if you're finding this market hard to trade, I would agree with you. But not be. It's just because nothing's going on, right? It's just because nothing's going on. Not that much is going on. Now, of course, there is always a trade to be done. There's always one chart that's moving. But globally speaking, as opposed to normal market conditions, you're not seeing that two-sided action. You're not seeing those healthy moves. You're not particularly seeing a lot of liquidity, and you're just seeing market hitting air pockets, right? Every time some orders come in, but it's just not that much to do. I wouldn't worry about it. CAD JPY. Oh, it's been a while. I never look at these. CAD JPY. Do you have a specific question on this or specific time frame you're looking at? Let's get a picture. Let's get a big. So broader picture is really not going anywhere, right? Kind of stuck. On the daily, it looks like you're getting a little bit of a retracement here. It looks like the 200 DMA got stick saved at a place where you'd expect it. Didn't we talk about this last time? Somebody asked me about this recently, I think. So you see basically what happened is you have an interesting zone here, right? Basically, since after the beginning of the year, right, we opened the year and we ramped up, right? Then what happened after we ramped up, you got this kind of top. Then the market came back down, put in this low, and rallied back to new highs. Now what's happening is it's been coming down in a fairly orderly fashion, making lower highs and lower lows. And here, once again, for the third time, you got that reversal and that stick save at the 200 DMA. So here, what's going to be really important is the market going to continue with the series of, lower highs? And that means, are these moving averages? And is this previous resistance going to act as resistance again? And that probably opens the door down for a continued move. Or is this area going to break? And at that point, then this could easily squeeze all the way back into these highs. To me, it's not a particularly interesting chart. It's not something I trade. I don't know if that answers your question, but yeah, I think Russell's going to be particularly interesting today. Have to keep an eye on bonds. I mean, the bonds were trading very, very heavy, all things being equal, and, led by the Bund. But here it's kind of stuck in right. So basically here it's catching a bid exactly where you'd expect it to catch a bid. So, day might be over if it can hold here, right? But we'll have to see. But clearly something you want to watch going into tomorrow is going into the PCE number and into Powell. You want to keep an eye on what the bonds are doing, how the bonds are trading, right? But here, to give you an idea, right, just to forget the headlines, forget everybody going crazy about the bombing, people going crazy about FOMC headlines. Look at it. Euro JPY inside yesterday's range. Euro GBP almost inside yesterday's range. Aussie and Kiwi inside yesterday's range. Yen inside yesterday's range. Euro inside yesterday's range. Cable inside yesterday's range. Crude inside yesterday's range. Silver inside. Gold inside. ES, YM, and NASDAQ almost back inside yesterday's range. So what's that telling you? That's telling you nothing's going on, right? still fairly neutral, right? Markets trying to clip stops left, right, and center, trying to probe. But all in all, we're still hovering around inside yesterday's range. So, right? You see what I mean, guys? There's just, it is what it is. And the nature of this market is likely going to continue to be, right, a market where sideways to up biases sideways to up as the market's going to try and continue to grind higher. But anything, a headline hits or something hits, markets and some more size, some more orders come through, then the market's going to hit an air pocket and puke. And then we'll have to see how bad the headline is, how bad the puke is, to see if it can be stick saved or if there's a bigger flush. Unfortunately, that's just the hand we've been dealt. So it is what it is. Okay, so any comments, any questions, anything anybody's looking at? I'll stay on as long as people have questions. We've been going for, 25, 26 minutes, something like that. Again, I got nowhere to go, so I'm in front of the screen, so I'll stay on as long as people have questions. So shoot, or we're going to shut it down early. Let me see if I can see anything interesting to discuss. There's just not that much going on. I was waiting to do this. I said I was going to do these once a month. I was waiting for some action to do it because everything's been so boring. But, went live and everything's kind of stalled. So, and you see these key levels kind of are still there. Gold still hovering around the 1800, yen 110. Got the 92 just up here on Swissy. It's just kind of not a lot going on. I was speaking earlier about SPY versus sector or individual stock positions for long-term hold. What do you want me to talk about there? Well, the whole discussion was that, if you go back, everybody tends to look at look at Amazon or something, say, if you bought Amazon 10 years ago, 20 years ago, right, and you held, et cetera, et cetera. And the only thing I wanted to point out is just that if you look at any of those stocks, right, they had massive drawdowns, and chances are you're going to be scared out of those, right? Especially if you're trying to pick one or two names, right? So unless you've got a specific edge or you've done a lot of research on a specific name and you're extremely committed and you're not going to look at it, it just makes a lot more sense to hold an ETF like SPY and just, either monthly cost average into it. But what that does is that, especially if you only have a portfolio of 3-4 names, you can get massive drawdowns, right? At least with the SPY, those drawdowns will be, will be a little bit smoother, right? To really smoothen that out, you'll probably have to add a little bit of fixed income and commodity exposure. But bottom line, going back to the answer in the webinar question in the webinar you're referring to, look at the components inside SPY. Essentially, you've all the FANG men, right? Plus Berkshire, who owns a lot of tech. You got NVIDIA. You got so much tech exposure there that if you're trying to have a play on tech, rather than giving yourself 1, 2, 3 names you're going to pick, you're much better off, in my opinion, just sticking with the SPY, or if you want XLK or something like that, right? And then it also, how you manage it depends in, is it in your 401k? Is it a retirement portfolio? Are you just, there's so many factors, but bottom line is just the vast majority of people, when they go back, and if I'd put 1,000 in that stock, 99% of them would have puked them out when you had the first 50+% drawdown. So I think for those things, especially for long term, it makes a lot more sense to just set something up automatically, right? And then just don't bother looking at it. Just don't fiddle with it. But if you have any more specific questions, Eric, just email me and I can cover it in one of the Vimeo videos or something like that. So again, here we're kind of stalled. I still think that the kind of medium term, as the market is going to have to reprice expectations, it makes sense to look for the dollar to strengthen again. And I think there's some very interesting stronger dollar plays there. And that's probably a trade, in terms of a swing trade, that's easier to hold or to manage. And if you're looking for a bang for your buck in terms of velocity, I'd still be focused on equities. I'd be focused on ES and NASDAQ. In a couple of weeks' time, once we get into September, I'll be a lot more focused on the Russell 2. And the one where I'd be least interested to look for is the YM. Ultimately, if you get aggressive moves, they're all moved together, right? But again, I prefer those. And again, we're talking about velocity of move, like we discussed at the beginning of the session. It'll take 3-5 days of gap ups and no volume squeeze, and market will give it back in 2 days, right? 12 days of ramp, market will give it back in 3 days. That's just where velocity of move is. That's how the market tends to trade. And again, I would be careful today into the close, being too aggressive, trying to bid up risk. If anything, I would be neutral to underweight risk. I would expect to see some people squaring off some positions, taking some off the table, and some hedging coming in closer as we get closer to Powell and PCE tomorrow. Yeah, NASDAQ back into previous day. If you're being aggressive here, as long as that previous day level is being defended, right? You can easily short back into previous day highs and stops above here, or if you're more aggressive, trying to work that position around here with wider stops. But as long as we don't get back inside yesterday's range, this will likely trade a little bit heavy. All things being equal, you have to be a little bit careful, because seeing the context, you would not expect us to get an awful lot of traction, right? Just ahead of the PCE and Powell. You'd expect the market to want to wait for that before serious moves. But, again, I would be careful trying to buy the dip today into tomorrow, right? At least wait until Powell and PCE. Okay? Any other questions? Any other comments, guys? Anything anybody wants to discuss? Nothing's off the table. Okay. Okay, guys. Well, thank you for stopping by. We'll do it. I was hoping to get more traction, right? I thought, let's go live. We could get some moves, but it's just stalled, right? So it is what it is. But, again, as promised, we'll do these once a month, hopefully when the action is moving. And let's see what we get. I can't stress this enough. Be careful into the close today and tomorrow. We should have some decent trading opportunities, some decent action, right? And my pleasure, Debbie. Have a great one, everybody. All the best. Thanks for stopping by, and talk to you guys soon. Take care, guys. Bye-bye.